Yeah, good evening, friends. Welcome to Spider Software. I'm Santosh Kumar Shetty. Through this video, I want to educate the viewers and the technical analysis participants and traders a very good concept where it gives solutions to traders in a very mature and intellectual way. The topic of the content is quantitative with technical approach for identifying the reversals in index trading. As a technical analyst working on the indicators, oscillators and the price actions, every stage of layer of adding about the decision making, it will helpful towards the improving the strike rate in your decision. With this approach, if we can able to add up the analytical points of the quantitative analysis or quantitative data analysis, it means that where we are selecting the quantitative data of particular period, then analyzing only on those period of data with technical analysis toolkits, this approach will enhance your strike rate and increase your high risk reward trades for the trader. I hope so the glance view has been given about the concept, but in terms of explanation and simplicity of the point wise discussion can make you the clarity on what the strategy, how it is going to helpful to you by using this strategy. Before going ahead towards the technicality and analytical toolkits, let me introduce myself. I'm Santosh Kumar Shetty. I'm working in the industry for more than 15 years. I've been using this application for more than 8 years. It's a very good application. It has professional approach. It has a very versions to see for a trader. It is quite far above the other applications which are available in the industry. Let's go towards the topic. What are the toolkits we are going to use in Spider software in order to implement the strategy? We are going to use the quantitative analysis toolkit of Fibonacci retracements, and we will select the particular period of data set like 1 week data or 2 week data only. Then we try to understand those data set, and second we'll use the indicators or customized indicator setup which will be used in the lower time frame to generate signals. So the viewers got a glance view about the toolkits what we are going to use. We are going to discuss on the Bank Nifty trade which is being generated on 12th February 2024. This strategy has been working on the objective of identifying a trade with higher reward ratio with lesser risk, so that your strike rate will, with considering the strike rate will also be very good. The first part we are seeing the 3-4 charts here. One is a 4-hour chart where we are seeing 2 candles per day. This is 12th February 2024. It's a 15-minute chart. It's a lower time frame. It started from year 45,949 was the opening. Here we will keep a 60-minute chart. 60-minute chart. This chart is started from here. Here we are seeing the weekly chart. Weekly chart where the fresh week starts from Monday on today itself. So we are taking 4 charts now. The viewers got a clarity what is this charts are all about. Now we will talk about the first what is a quantitative data set. Every new week starts, we need to take a data set of last 15 days. It means this week started on 12th. We will take a data of the last week which is been ended at 9th, and before that week which is ended 2nd. These 2 data set price structure Fibonacci plays a very important role to understand the critical supply and resistance points for the Fibonacci retracement cycles. If you see here, in the last 2 weeks, there was a rise and fall. Again, the rise was very fall, and the fall was very large, which has crossed the previous low, and there was an retracement also again. So overall, it's resembling that after the rise there was a fall, and after the rise there was a fall, again small retracement, again fall. In next leg of fall there was a high retracement. So participants are mostly getting a pressure of selling on the upper levels. In same manner, they are getting a buying pressure from the bottom also. Right. Generally, it can be said highs are falling and lows are also highs are falling, lows are retesting. This is what happened here. So if you see here, whenever the Fibonacci retracement basics in this cycle, 61.850 will be the resistance for this week, and supply points will be the 123.6. In same way, I have taken the 5 days data set. What is 5 days? This is the larger time frame. 15 days data set. Here look at the 5 days. Here every new day comes, the trader has to draw a retracement of last 5 days. So I have taken this is a Monday's trade. So Friday, Wednesday, Wednesday, Thursday, Tuesday, and Monday. Out of these 5 days, this is the high it made, this is the low it made. When it's opened, here also same thing. There was a fall, rise, again fall, again rise. Same structure. So here the resistance will be same 50 to 61.8, supports will be this one. So we clearly seen that cycle we understood data set, we understood the important supply points. Now a trader need a way to how this data is going to helpful me to identify a trade in intraday for a larger trade, small risk, high reward. If you see here, I have been in lower time frame is always an action points. This lower time frames actions need to be integrated with the larger time frame supply and resistance points. It's going to be act as a beautiful trade for a trader. Again, I'm repeating, lower time frame actions integrated with the larger time frame support and resistance. It's a beautiful trade where we will generally aware about it, but synchronizing those things rightly with the right process is very important. That is what we've done here. So we got a sell call generated around 10 o'clock at a price of 45,564 in Bank Nifty futures. So during the time, the price is at resistance in the both cycles. So here I was clear that my risk is this much. There could be an rewarding over here that can retest the previous bottoms. So I hope that how we have been integrated when we understand the larger time frame action points and smaller time frame action points, then automatically we will be out of the consolidations. This technical approach of identifying the buy and sell is being customized indicated to avoid the misleading or false signals in the lower time frame. Whenever a seller, whenever in downtrend, a seller can sell only at resistance, and in the buying side always be on the bottom side. Whenever you buy, always be a bargain buyer. Whenever you sell, you should sell at top. That is what the technical analysis is all about. So yeah, very simple. We will going to take every 5 days lowest low, highest high Fibonacci, understand the price trend. We will take every 15 days Fibonacci, understand the price trends, then spot the resistance support points for the trend. Then you identify signals where whenever good signal generates here, then you take action. I hope so. I have given the very good content to the viewers. Let us see the 45,500 put. It was around. I was traded on the on this strike price. It was around 350 to 400 rupees range. See, it made a high of 1,000 rupees yesterday. I hope so, guys. I given the very good content. To this, you can be able to build a very good strike rate in the market. That is very important to generate and consistent money. in the market. This approach gives you a lot of variations and make your analysis more professionalized manner. Now my question is, why to use Spider software? Spider software is a very good application where the team has very good intellectual skills to share the very good content, and it is always an open internet forum to discuss about the good intellectual skills and strong contents. The platform contains so many features where we can able to visualize the market in a very advanced and vibrant manner. This data which provided in Spider software is very genuine, and the data and the scanners and efficiency of the all features coming together will also land up a very good way for a trader to grow his experience and in financials, and plan his trade more advanced and efficient manner. Thanking you guys. I hope I've given the very good content. Signing off, Santosh Kumar Shetty.